Now, the Central Bank of Egypt's Monetary Policy Committee kept overnight deposit and lending rates unchanged at 16.75% and 17.75% respectively. Now, the rate of the main operation and the discount rate were also left unchanged at 17.25%. The regulator says the MPC's decision to keep key policy rates unchanged is consistent with achieving the targeted disinflation. Now, it's added that the increase in international oil prices gained momentum in April and May 2018, leading to an upside risk in the domestic inflation outlook. Egypt's annual headline inflation continued to ease in March and April, recording 13.1% in April. At 11.6%, annual core inflation continued to decline in March and remained almost unchanged in April. Now, Yasser Hakim joins us in Cairo to discuss today's decision further. Very welcome to the show, Yasser, as always. Now, not much of a surprise. We all expected to see these rates remain unchanged, given the expected price hikes in fuel, electricity, as well as transport prices, and of course the stronger US dollar as well. So what reasons did the MPC give for today's decision?
Yes, it can see that this is the best opportunity to keep the market stable. It has already dropped by 2 points in the last 4 months from 20. It was up to around 20% before. So dropping another more points now or reducing interest now is going to be a bit premature, especially that we are nearing the end of a fiscal year and the beginning of another fiscal year. So it was the right time to wait and see what the market and how the market will react to other reforms that will take place at the beginning of the new fiscal year. Egypt's fiscal year starts on July 1st. So we do expect more changes in the coming month and a half.
Now, of course, Yasser, inflation was a key reason for their decision. We did see it ease to 13.1% in April, but it was just a slight decrease compared to the sharp fall that we saw in March. So what is their outlook for those numbers, given the price hikes we expect?
Yes, exactly, because just like you said, there has been a lot of improvement in the economy and a lot of economic reforms that have helped in pushing the inflation down, and the central bank did the same. Obviously, we've seen in the last month things have slowed down, and that's why we don't see a vast difference in the reduction of inflation reduction. However, yes, there will be more cuts in subsidies on the 1st of July or early July with the new fiscal year. So that will lead to more inflationary effects, higher prices for electricity, for products, for all kinds of production. And therefore, we expect that the cuts in subsidies and the higher electricity prices will push other products up and will again make some changes in the, we will see some changes in the inflationary numbers in Egypt, maybe higher, so going back higher again. But also that's where the central bank will have to intervene again and see where he will go. Will they stay stable? Will they push it down another point or so? Or will they wait until the market stabilizes again and then start taking action from the central bank?
Well, in the meantime, Yasser, as they did keep rates unchanged, how do you expect to see this impact markets going forward, particularly demand for Egyptian treasury bills as well as bonds, which we know is a key source of funding for Egypt's budget deficit?
Yes, and it was very successful in the markets. The euro bonds, the dollar bonds, when they were floated internationally, they have managed to gain a lot of demand, and Egypt garnered more than $10 billion only in 6 months. And it was a main source of revenue for the government or income at the moment to help in the budget deficit and to boost the foreign reserves. But at the same time, having high inflation, having high interest rates, at the moment in the banks might be good for some, might be good for the Egyptian pound, but it won't be good for investment. What's happened is that what you need is to encourage investments and to encourage loans for opening new businesses and enhancing production. And this doesn't happen when you have high interest rates because loans will be expensive. And therefore, it was important that they start reversing the trend and reduce the interest rates. Maybe this will affect, yes, the bonds for a while, but on the long run, it's better for the economy to increase investments.
Now, Yasser, in terms of the country's growth outlook going forward, how did the bank see certain global factors impacting that? Factors such as the increase in oil prices, U.S. interest rates, as well as U.S. sanctions reimposed on Iran. How do they see that playing into Egypt's future? Yasser, are you still with us? Well, it looks like we've lost Yasser there, but many thanks to Yasser.